Hey, what's up, ICT traders? Good to see you back here again. It's Solomon King here. So yesterday I've made one powerful video, and then after making the video, somebody asked me to make another video explaining the power of counter trading, or what it means to counter trade in the market. Now, the best way to learn in the market is to actually do practicals. You can only learn how to trade by trading. So I have a typical example of what it means to counter trade right here. This is a live trade I'm taking anyway. Let me quickly show you. The trade is running now. You can actually see it's running at almost $1,200. That's a prop firm account anyway. So when we say counter trading, we are not actually violating the fact that the trend is your friend. What it means to counter trade in the market is to basically understand how the behavioral pattern of the market is. Now, I've made a video yesterday, a very powerful video explaining the very two things that price always do in the market, and that is price targets liquidity and then balances inefficiencies. These are the only things price is doing in the market. All right. So looking at this particular example now here, it's a live trade. I'm going to record everything for you till the end. I just entered the trade not long ago. It's on US 30, the Dow Jones. All right. I'm beginning to love trading indices in the market. Honestly, I love trading indices recently. They're very powerful futures indices anyway. So what I saw happened on this particular PA was this. I didn't even look at any time frame higher than the 1 hour. All right. But you can go as far as the 4-hour time frame, or you can go to the daily time frame. So what I was looking at was just the 1 hour time frame. Now, I hope you know from your knowledge of market structure, price is now bullish. Why? Because we had a shift in market structure right at this point. I know some of you will still be asking me how, because we have price here, we have retracement, boom. We have a shift in market structure at this point, and this makes this a bullish market. Which means on an ideal level, I'm not supposed to be counter trading. I'm supposed to follow the trend. I hope you understand how it is. But one thing I want you to understand is that everybody is counter trading in this market. What I mean by that is this. Let me show you. Let's say we have a downtrend. All right. This is just a sketch. Pardon my drawing. If we have a downtrend like this, and in this downtrend, we have it in the daily time frame. All right. We have price breaking structure to the downside, breaking structure. As we keep breaking, if we break to the lower side and then price remains below here, the range is from here to here. Price remains below this area until price comes back and close above here. We don't have a shifting structure. So what we are saying is that in this time frame, this is known as a bearish market. So if we are to go to the 4-hour time frame, all right, which is what we call the lower time frame. I'm just giving an example. Let's say this is daily and you drop down to the 4-hour H4. What you're going to see here is that you will see something like this. You will see something like this. It's not a straight line as it is on the daily. So if you pick this line and bring it here, what do you have here? You have a miniature break of structure downward. As price keeps coming, it reaches a point, it will shift structure before it starts establishing an uptrend that will retrace back to the premium, because price will always do premium and discount. Premium, discount, reaching out for a PDRA, either an order block or a fair value gap, whichever one you want to look out for, it will reach out for it. All right, it will reach out for it. So now that we have this understanding, when price finally shifts structure to the upside, as price is going to the upside, remember this is in the 4-hour time frame or even the 1-hour time frame. This is going to take a longer time before it comes here. It may take a day. That means for that day, my bias is bullish. This is exactly what I'm doing. My bias is bullish. Now, if you look at what I'm doing on this chart, I have an uptrend. If I do premium and discount, I am still at a premium. What I need to do is to locate a discount, the PDRA on discount. What is the PDRA on discount? We have a bullish breaker block here. That is my target on this movement. That is my price target on this movement. So if price will locate this place, I am very okay. So I am going against the trend, but then I am doing what price will do. Price have sought liquidity here, and this area, now it is about to balance inefficiency. So when I saw it in the 1 hour time frame, it was okay for me because I know the counter trading I'm doing is not haphazard. It's not random. So all I needed was, when I saw price did that, I just said, okay, after price targets liquidity, the next thing price does is to balance inefficiencies. I have so many inefficiencies. It will start from the inefficiencies that are in premium to the inefficiencies that are in discount. Oh, what a beautiful knowledge for you. So all the inefficiencies here will be balanced eventually. So I dropped down to the 15-minute time frame. Beautiful. I said, okay, give me a market maker sell model. That is simply a shift in market structure. So price started. Honestly, I was watching it. Price started, went up, no shift in structure, no shift in structure. This place, no shift in structure, no shift in structure, no shift in structure, no shift in structure, until I dropped down to the 5-minute time frame. Let me show you. I even went down to the 5-minute time frame. So on the 5-minute time frame, I saw a shifting structure right at this point. It's something simple and straightforward, guys. I saw that shifting structure right at this point, and price came back to it, because look at this. We have price pushed up, retracement, pushed up, crashing, and then price came back here, came an inducement, then crashed. That was where I entered. You know why I entered? Unicorn entry model. I have a confluence of a fair value gap and a bearish breaker block. Bearish breaker. A confluence. Alright. So this is actually what is happening there. And it's $2,000 profit. Now it's a Profem account anyway. It's not like I'm trading with my money. It's a challenge from Profem account. Alright. I took some losses last week, so probably I will be able to get back with my profit. So I'm watching it. The target is about $8,000. So if it goes in the direction I am predicting, I will show you the progress. So note that every point here, all these lows, we have liquidity. As soon as price keeps balancing these inefficiencies, we'll have some stoppage, we'll have some kind of dragging. But at the end of the day, we will run at profit. So I'm watching it. I will show you everything at the end of this video. Thank you, guys. I'll come back to continue with everything I'm showing you. So make sure you stay. I will continue once price reaches that area. Thank you, guys. All right, guys. So far trade has been moving in my direction, and I told you that I will record every single step in taking this trade for you. So this is the second step, and I'm showing you right now that price has moved from here to here. On my trading account, it's almost about $3,000 profit, but then I am targeting at least 5,000. That will be somewhere around here. Now we have just reached a particular area where there is a drawn liquidity. It is very possible that price will close up this imbalance and continue downward to the next imbalance. So I am watching it, but right now I have moved my stop loss to break even. All right. So I'll be running on zero lost. So everything running now is on zero lost because I have just filled up this particular imbalance, and I'm in the second imbalance before I reach this one. The target is here, but As soon as I reach 5,000 or 6,000, I may close the trade because I have a consistency rule for my PropFirm trading account. So I'll be able to meet up with all the targets and the rules. So this is basically what I'm doing. I'm watching it. All I have to do is to sit back and watch it. And if I can get this type of trade 3 to 4 times in a month, or you can get it 5 times in a month with a very big account, you'll be very much okay. All right. So I'm watching it play out, guys. I will come back and show you the final result. All right. I'll come back and show you. Thank you. All right, guys. So still on the same trade. I've been following this trade all through. Now, price have reached here, but we are seeing this retracement coming in on this same trade. Now, there's something I want you to learn in this particular trade. The way I normally follow my trades is I follow the rhythm of the market, and I also notice what is happening. You see, when price came back here, hitting or filling up this fair value gap on the 15-minute time frame. Let me show you that. All right, you can see the fair value gap. Let me make my chart very clear so you can see what I'm saying. If you look very closely, you will see this fair value gap with this very small order block here. Bearish order block, fair value gap here. Price did the right thing by filling up this area, and we saw price starting to go down on the lower time frame. If you go to the 5-minute time frame, you will see what I'm perceiving price will do. On the 5-minute time frame, if you look very closely, all right, you can see what I want you to notice is that price has created this lower high, and I put my line right here. So the way I exit trade, while price is behaving this way, if I see price close above here with the body of the candle, I just know that this trade is not going to work. It's going to turn back. So I will close it with my little profit and leave the market. But as far as I'm below here, you can also see that I've also marked this place as a market structure shift because I've closed with the body of the candle just a little bit down here. Okay, I even saw it on the lower time frame. I was looking at it on the 3-minute time frame. So on the 3-minute time frame, I consider it as a shift in market structure. So this is my benchmark now. As soon as I see price goes above this, the same way I entered, this is the same way I will exit the trade. All right. You see this area where I marked as market structure shift. If price for any reason closes above it, I am closing this trade. And then I'll just show you what I did everything. At least I'm still running on profit and I'm not at loss. You can actually see that the trade is actually running on profit. All right. About $1,800, still on profit anyway. So I will keep following it until I reach my target if it keeps going, or if it breaks above here, I close it because it means we are about to go back upward. Just like the way you started the downtrend, a shift in market structure, and then the entire movement started. All right, a shift in market structure from an uptrend, the movement started. If I have a shift in market structure to the upside, it means the downward has finished also. So that is how I will end the same way I started. So let's go. I'll come back again, guys. All right, traders, I'm back again just for the final piece of this particular recording. And I told you that I was to close my position if I had price shifting structure on the 5-minute. All right, the trade is still running, but I wanted to close this particular video. I wanted to make sure that all the lesson I wanted to teach you has been learned, but I will allow my position to continue running as it is now. I still stand with my words. Okay, now it's no longer there, but here I'm watching it as price is moving. I am not going to touch anything. I'll just allow price to continue moving in my direction. So quickly, a good recap. What I said was that counter trading can be done when you know what you're doing. In fact, everybody is counter trading in the market. The only difference is that we are counter trading with understanding. What I started with was the 4-hour time frame or the 1-hour time frame. The 4-hour time frame is actually bullish from that shift in market structure. As I told you earlier on, I was seeing this shift in market structure to the upside, and then price was going upward, sweep of liquidity right above there. You can see this is a bullish market structure, but price was to locate this bullish mitigation block, and if price was to do that, I have advantage of time. So that was exactly what I'm doing. So this retracement is what I'm trading in essence. So that is the counter trading. To me, this retracement, before it comes back here, it takes time, and that is my bias for today. I don't care what is happening here, here or there. The most recent is shifting structure, liquidity sweep, and then after price targets liquidity, what it does is normally to balance imbalances, and that is what I did on this particular trade. Everything you saw was basically something you can repeat every time. It's not hard to know your bias when you know this kind of information. I hope this video helps somebody out there, and if you find value right in this video, help me give this video a like, share it, invite somebody to this community. Thank you guys for watching. See you in my next video.